What is up, everybody? Welcome back to another Justin Daniel Finance. I am Justin Daniel, and thank you so much for tuning into the channel. If you're new here, please go ahead and hit the like and hit the subscribe. It's greatly appreciated. And if you're already a subscriber, thank you so much. Today we're going to talk about a company called Upstart, ticker symbol UPST, which is a company that has a ton of growth potential, recently has made it to the top 5 holdings in my portfolio, and I'm excited to talk about it, so please stick around until the end. Okay, so like I said, we're going to be talking about Upstart today. However, I do want to start off by talking about Paysafe, because everyone knows that I'm a big bull on Paysafe. I love the company, my biggest position, a lot of growth potential, and today it finally really had a good day, closed at almost 10% up, and what's really exciting is that it just got added to the Russell 3000 index, and it started gaining some traction with the Wall Street Bets community as well. And even though I do not believe that this is a meme stock or anything like that, it's great to see it getting the attention of the retail investors who realize, what a great company this is. I'm holding long, I'm holding strong. Again, it's up 10% today. That's great, but I'm looking for it to run. And, as I've mentioned before, my short-term price target is $17 per share in the near term. Much, much higher in the long term is what I think. As more and more states legalize gambling, online gaming, sports betting, all that good stuff, it's just got a ton of potential, and it's really building a moat within this niche market. I think the sky's the limit long term. So I'm definitely bullish, and I just wanted to mention that. If you follow me on Twitter, you may have seen this post that I did that was basically showing a link to the Reddit article, Wall Street Bets. So shouts out to whoever, drafted that. Some very good research, and I loved seeing it. And I'm sure all the Paysafe bulls out there love seeing it as well. So I just had to mention that. It's a great way to end the week. Right now I'm filming this Friday, kind of close of the market. So it was a good day. It was up even more intraday. I think it was up about 14% for the day. But again, I'm looking for the long term on this one. Just glad to see it finally getting some traction after kind of some of that downward trajectory. It's nice to see that hopefully it's on the upswing and we're going to continue this run. Now, let's talk about Upstart. Upstart, as I mentioned, has become one of my top 5 holdings. And what is Upstart? Let's start with that. Upstart is an AI-based platform that basically helps with lending, basically helps with kind of a new FICO-based credit score. If you're familiar with FICO, a Fair Isaac company, it's a system that gives a credit score, kind of determines your credit worthiness so that lenders can make decisions on whether they want to give you a loan or not. It's a system that's been used for decades, but with this AI application, what Upstart is basically saying is we can use AI to have a much better results. We can have much better decisions, lower defaults, more approvals using this AI platform. I love that it's founder-led, so it's basically created by the 3 founders. I think they come from a Google background. There's insider ownership of the company. So all of these are good things just to kind of start off. That's a little bit, about what the company is. Looking to revolutionize credit score, revolutionize kind of that FICO-based system with a new proprietary AI-based system. And they started off basically just making personal loans. So like if you wanted to get a personal loan or maybe consolidate debt, that's kind of the market that they started, and they're increasing their revenues. We'll get into some of the numbers, but they're increasing tremendously. We're going to take a look at their most recent quarter and look at some quarter-over-quarter growth, but they're profitable, they're growing their revenues, they got a lot of cash on hand, they've got a great system. One of the potential risks is that they do have some concentration risks. And, I also do question whether other competitors such as FICO themselves or Dun & Bradstreet or, Intuit and other type of companies could potentially enter the market. Before I jump into it, let me just share a little 2-minute video directly from the company themselves, directly from Upstart. So you can watch this 2-minute video and get a sense of who they are.
Artificial intelligence is potentially the greatest technology transformation the world has ever seen. Upstart is applying AI to the multi-trillion-dollar lending industry, enabling a superior loan product with higher approval rates, lower loss rates, and a highly automated digital experience. By connecting consumers to its AI-enabled bank partners, Upstart has built a fast-growing financial technology business with exceptional unit economics, clear operating leverage, and profits. With an AI model trained on almost 15 billion cells of performance data, Upstart is just getting started. Each year, banks in the U.S. originate more than $3 trillion in consumer credit, and virtually all of it could be improved with AI.
I left Google in 2012 to found Upstart with Anna and Paul. We were convinced that modern technology and data science could improve access to affordable credit. It seemed obvious that there was room for improvement. Why should the credit score invented 30 years ago decide who's approved for a loan and who isn't?
I saw in school and on Wall Street the most talented PhDs in computer science racing to perfect securities trading and ad targeting with these technologies. Yet, I saw no one applying them in the one place that could arguably be most impactful to real people: consumer credit.
For me, access to credit is deeply personal. I grew up in Russia and I dreamed of moving to America. I never would be where I am today without access to credit. Credit unlocks opportunity and mobility, and thus the price of credit equals the price of the American dream. This is why we founded Upstart.
There you have a little clip about who they are, who the founders were, why they started the company. And I think they're really positioning themselves to grow aggressively from where they are now. So even though, we can see the share price right now at just over $122 is what it closed today. That is up like, 177%. Year to date, I think that's right. Just looking at my notes here. Yeah, 177%. If I look at the year to date, it was down 1% today, whatever. But it's up, pretty strong since its recent IPO. And at the share price, it's 122 is not its all-time high. Personally, I just want to say I'm looking at a price target of roughly maybe 180 in the near term. And we can get into some of the reasons why and some of the growth projections, but I just kind of wanted to mention, okay, here's the share price. And when we talk about their growth potential, notwithstanding the risks that I mentioned, look at what they can grow into. If it's the case that they just started out with personal loans, talk about getting into auto loans, and even more importantly, mortgage loans. So if they look to get into that, just right there in and of itself, using their same proprietary AI system, which again goes above and beyond the FICO score to really look at all the things that would decide someone's creditworthiness and whether they're at risk of defaulting on their loan, if they can transform that not only into auto, but also into mortgage, and also just position themselves to basically partner with other banks that don't have this kind of platform. A lot of other banks out there, they want to make the best lending decisions they can. Obviously, they want to keep their default rates as low as they can. And if they can partner with a company like Upstart, who already has a platform that's going to make, lending decisions that have less defaults and more approvals of creditworthy individuals, well, guess what? Then their business is just going to do all the much better. So anyways, Josh Brown recently said that this is one of his 3 stocks listed here on Benzinga to look for in the second half of 2021. And he says it's because they are uniquely positioned to help other banks, or to help banks be able to make better lending decisions through their platform. So that's really cool. Just some of these stats here, they say there's 75% fewer defaults using their AI proprietary system, with 173% more approvals at the same loss rate. So again, let me say 75% fewer defaults with 173% more approvals with the same loss rate. So those are really good numbers. They go on to say 4 out of 5 Americans have never defaulted on a loan. So they believe, there's Americans out here, and potentially they'll expand beyond, even America, who knows. But right now, 4 out of 5 are not defaulting. That means there's a lot of people that are really credit worthy, and they may not be getting access to the loans and the capital that they could if they just had the right access and the right kind of platform that allowed them to get those approvals. So again, I kind of touched on the fact that the share price right now, 122, it's up 177%. And if we look at their financials, let's just go ahead and throw up their financials here, because this is really impressive. Here we can see their quarter over quarter for the most recent quarter, Q1 2021, and we see that the revenue's $122 million, which is up 82%. So that in and of itself is pretty great. And they've already are more than half of what they did in 2020 within one quarter. So revenue is growing at a very good clip, which we want to see with growth stocks. And we can see that their net income of 10 million is up 582% quarter over quarter. So that's huge. We love to see net income. We love to see net income growing. We love to see that they're a profitable company, because a lot of companies that are high growth companies really haven't achieved profitability. They might not have net income. They may not be growing. They may not be profitable. Well, they hopefully are growing, but they may not be growing net income is what I mean. And so the fact that Upstart is profitable does generate net income. And look at the cash as well. This quarter, they increased their cash by almost 25 million, which is up a staggering 413% on a quarter over quarter basis. And we can see that they have cash on hand of $257 million. So that's a good amount of money to have, cash on the balance sheet. And it makes me feel good, because then we don't have to worry about them going to the debt markets. Maybe they're not able to get debt or take out expensive debt, or, diluting shareholders by issuing more shares, because they got all this cash on hand and they can use this to continue to aggressively grow. And whether that does include acquisitions or whether that's just organic growth by continuing to ramp up, the marketing of their platform and the channel partners for their platform, they got the cash to do it. And so I really, really, really like that. I really like the revenue growth, the net income growth, and the cash increase and the amount of cash on hand. So again, financials, fantastic. The strategy, I think fantastic. Again, I mentioned earlier the concentration risk. I just want to mention that one more time, because if you take a look here, it does point out the fact that there's a 60% concentration risk with an entity Cross River Bank. And even though it's improved when we're looking at it annualized year over year, that went from 78% in the prior year to 60% this year, which is good, because we want our concentration risk to be low. Because that is one thing that, look, when a company has a lot of concentration with one or two big customers, if anything happens with that relationship, needless to say, it's going to really hurt the stock. So I would like to see that going down. And one of the things I really want to look at through the due diligence is, are they getting more and more customers, less concentration risk? That will be big as I continue to monitor this company, and I plan on continue building out a bigger position as the months and quarter goes by with this company. But I do want to look for that. And I also do want to look for just the traffic risk as well. So it shows here 53% of the traffic was coming from Credit Karma. And Credit Karma was recently acquired by Intuit. You probably know Intuit, QuickBooks, and all that. So 53% of traffic is big, but again, it looks like this is also improving. And we're going to want to look to make sure that it does indeed continue improving, because that's risky to have so much traffic coming from one source, especially what could be a potential competitor at some point in the future. But having said that, the amount of direct customer customer channel directly to the website, directly to the platform is increasing. So the more that the directly, as well as further partnerships with more banks. So these are the things we're going to look for. More customers going directly to the platform to use it, more banks using the platform integrated to their own lending systems to make their approval decisions. As those continue to grow and hopefully the concentration risks then continue to decrease, that's going to be a really good sign for the company. If they can fend off competitors, they've already got kind of that first mover advantage, which is good. There is room for competition, so that's a risk, but I see this company continuing to grow by expanding into auto, by expanding into mortgage. They're already killing it in the personal space. If they can continue to get more and more partnerships with other banks, then the growth is just hopefully going to continue. We looked at the quarter over quarter growth, phenomenal. If you look at 2017 to 2020, it went from, let me check my notes here, 57 million in 2017 to 233 million in 2020. That's revenue, but think about that. 57 million 2017, 233 million 2020. And now in the first quarter of 2021, they're on pace to basically more than double that. So, they're growing really fast. It's wonderful to see. AI is certainly the future, in my opinion, and get a lot of focus on AI in places such as autonomous driving, other things like that. I think high frequency trading, it was mentioned on the introduction video from the company. But we haven't seen a lot of it in that space of consumer credit. And consumer credit is big, and it's a big space to be in. And again, especially if you expand beyond just the personal loan. So I'm bullish on Upstart. Again, it's become one of my top 5 positions. I think it's going to stay there. I think I'm going to build on it to become an even bigger position, but I am going to monitor for some of those risks. Let me know what you guys think. If you like this, please drop a comment. Please give a like. Please subscribe if you're not already subscribed, because folks, that's what's going to keep this channel going. I want to continue making good videos on good companies that I think are worth talking about. I want us all to make money in the stock market together. I want to see all of our portfolios in the green and growing as the months, quarters, years go by. This is a long-term hold. This is not a short swing trade, although if you are a swing trader, it might be good too, because as I mentioned, I think that this could get to 180 in the near term. And what do I mean by near term? At least 12 months or less. But that's 50% upside from where it's at now in the 120 range. So that's kind of what I'm thinking. I plan it on a long-term hold. I plan on keeping it a big position. I love the fact that Dan Loeb of Third Point Capital is a big shareholder. And Third Point is also a very big holder here of Upstart. So that's great to see, that big of a stake from this hedge fund, which I respect. But also there's insider holding. So looking at my notes here, we can see the CEO owns 15% of the company, which is great. I mean, of the insider holding, 15%, that's big. He owns 15% insider holding. He's the CEO. Clearly, he's holding onto the shares and owns these shares because he believes in the vision and the future. And you always want to see, or you certainly feel good when you see a lot of insider holding. And in total, there's 1.6 billion of insider holding we see here. So you've got insiders. Right now we have Third Point Capital as the hedge fund with some ownership. I think the company is going to continue to add more institutional ownership. That would just be my feeling when you look at a company like this. So I'm bullish. This is not a recommendation because I'm not a financial advisor. I am a CPA with an MBA in finance, but not a financial advisor. So I always want to make that clear when I'm doing these videos, because I want everyone to make their own decisions, know their own risk-reward tolerance, and understand what they're buying. But this is my take on it. I showed you a few different articles. I showed you a couple of the risks, but told you why I'm bullish on it. I hope you enjoyed it. I hope you liked it. Again, if you did, please give a like, please give a comment, please subscribe, help the channel grow. I want to get to 1,000 subscribers as soon as I can. So everyone helps, and it's greatly, greatly appreciated. Please go ahead and subscribe. Now, with that out of the way, I'm going to wrap up the video by saying, you've been watching Justin Daniel Finance. I am Justin Daniel. Really appreciate everyone who watched all the way through to the end. It's greatly appreciated. Until the next time, I hope everyone out there is making money. Hope you have a great rest of your day. And until next time, take care.